The yen is in focus for investors as it hovers near a 6-year low and continues to weaken. On Monday, the Bank of Japan offered to buy unlimited amounts of 10-year government bonds for the first 4 days of this week. And Finance Minister Shunichi Suzuki says the government is keeping a close eye on currency markets to avoid what he describes as a bad yen weakening. Some analysts say the central bank has kept interest rates too low, while inflation and borrowing costs have darted higher in other economies. For more on this now, let's go to Danni Hewson in Huddersfield in the UK. She's a financial analyst at AJ Bell. Many thanks for being with us today. Danni, the first question would be, why is the yen depreciating when, especially at a time like this, so many investors look at the yen and other currencies as a safe haven? What's happening there?
Well, effectively, it is down to the Bank of Japan's monetary policy. As you say, they've still got ultra loose policy. What they're trying to do is they're trying to spark growth again following the slowdown which happened because of COVID. GDP is still below pre-pandemic levels in Japan, and while inflationary pressures have been beginning to pick up, they haven't been as acute as they have in other parts of the world. Still only around 2% in Japan, though at the moment, obviously with the situation in Ukraine, those cost pressures are beginning to increase. But it's also down to the fact that the Bank of Japan is trying to protect this key yield cap that it wants on the 10-year yield. So, it's offered to buy, as you say, unlimited bonds. And all that is just having an effect of bringing the yen lower and lower.
Right. We've heard a lot about Japanification of the economy, right, in the past few years. And what is the Bank of Japan really trying to do, keeping these bond yields that low when in the rest of the world they are rising? What are the risks for an economy such as the Japanese economy? I mean, a stagnating economy, stagflation or very low inflation, rather. What are the main risks?
Well, Japan has always been considered a safe haven because of the fact that it does export significantly more than it imports. But at the moment, what you have is around the world, global economies desperately trying to deal with inflationary pressures which are beyond their control. And by keeping this policy incredibly loose, there are a lot of questions being asked about whether or not it is the right decision because, households in Japan are hurting at the moment. They are beginning to pay an awful lot more, as are retailers as well, for things which are coming through. So there are massive questions being asked about whether or not this is sustainable in the long term, or whether the Bank of Japan is actually going to have to do something which they don't like to do, they don't tend to do, which is to try and boost the yen, the value of the yen. So, there is a real danger that this policy could lead to stagflation. Of course, we're seeing global economies around the rest of the world, particularly the Fed, making particularly hawkish moves at the moment, and a lot of talk that it will increase interest rates by as much as 0.5% next time around. And that, of course, could have the effect of making the currency, the Japanese yen, fall even more.
Interesting. We'll keep a close eye on the yen today in this session, but also on other currencies that are also in focus. Danni Hewson, many thanks for being with us today.